Okay, hey guys, this is Simon with Trade and Perform Coaching. Doing Ben, I think this is our third coaching session, and so tonight we're going to be covering a couple of questions that Ben asked me, and then we're going to kind of cover. There was really two really solid setups today. I'm going to go through them so that he knows how to take them in the future when they do set up, and they do set up pretty often, right? So. Uh, First, to answer one of Ben's questions, Ben was asking on the algo. So Ben, let's jump in here. And so there's always, let's talk about the volume relative to how it lines up in the trade. Where it lines up is really, really important. So um, how that volume bar lines up and where it lines up becomes a very important thing. And it plays kind of two roles, right? So let's look at it for a second because it's a good question. So whenever you ask a question and you will look at the system, how it interacts, there's two questions to it, right? So first we're going to find an example of where it worked pretty much picture perfect, and then we're going to find a place where it didn't work and see if we can gain an understanding from it and what we can do with it when it doesn't work, right?
Okay.
So the first thing would be like if we were looking for a short. So there's a couple of rules to using the algo with the volume bars. Um, so just a reminder, this is the wave. This is the wave down here. This is the volume down here, right? So you can see, if you're splitting hairs and like, you can see this is the highest volume, but even if they've been equal, this qualifies as the highest volume bar at the end. So what went on here, right? So I just try to make it really simple. Why did this work? Why was this special? Or why did this, for example, why did this not work? Right? So the idea is always to try to line up as much evidence as you possibly can. So let's get rid of the profile. And this is going right into today, right? So you can see we kind of had this, I said let's use today, but that was kind of a weird way that set up with that push to the high and then it re-auctioned the whole wave. But we'll do
Yeah.
this really quick, right? So there's three components that go into any good trade, right? And some of them you don't need the algo for to figure out. So this is initial balance, and you can see we just traded through initial balance all day long. It was really kind of a bouncy, kind of weird day, and that went along with what we saw in the profile in the morning, right? So when you look over here, right? So obviously I didn't invent this. You see it all over Twitterville, where you simply take, the roll to the low, you get a 50-60 retrace, and um, you get into the 50-60, and then you roll lower. So let's put ourselves in that mindset, right? Why is it that sometimes a 50-60 trade can work perfectly, right? And at other times, like let's say you did this over here and you drew your 50-60 over here. Well, why didn't this 50-60 work? Or why didn't, if you drew it the other way from the long side? So this is how I would attack the problem in terms of understanding, right? I'd go, well, okay, so this 50-60 worked, right? So this 50-60 worked from here to here. And then this 50-60 over here didn't work at all, right? Like if you bought that 50-60, you were just stopped out. So and then if you look over here, right, this 50-60, if you drew it from here to here, right? So it doesn't work yet. One of the things you'll see touted all over the internet is the power of the fib retraces and how the 50-60 is a strong place to trade. But if you can see in that series from 8:30 to 9:30, you'd have about one winner. You'd have three losers if you use the 50-60 and you get stopped. And the stops would all be in variation because the larger the measurement area, the larger the range between that 50 and 60 retrace. Does that all make sense?
Yeah.
Okay.
Yep.
So what I sought to do when I was creating the algos and working with Bill and working with other team members in the room, right, is, well, how do we figure this out, right? What makes one better than the other? So that's the first question we're asking, right? And so then we sought to go, well, okay, well, what changes the caliber of the trade, right? So if you look, so now let's look at it the other way and let's go look at this series here. So we obviously know eventually you got this beautiful roll to the downside, right? So let's go through the quality of this retrace, right? So let's look at it wave by wave. So remember, and this is one thing that a lot of people don't get, the more you get into the nitty gritty, the more you kind of get those aha moments, that what you're really looking for is the exceptional trade. right? So we're going to forget about retraces for a second, right? And again, we're looking at a 15 tick Renko bar. So a natural place to always look for a potential rejection area, right, is number one, you can always use the backside test of what looks like in Japanese candlesticks a hanging man. That's always a good place, but it doesn't always work. And let me tell you why, because you can come right over here and go, okay, well, there's the opposite. So we still have the same problem, right? So when you're applying that philosophy, like I see this all over the internet all the time, right? I see people posting charts and go, boom, backside test of the hanging man, and they'll put this picture, right? Well, okay, that's great, but what about if we take that same concept, and this is along my path of learning and dealing with the frustration, right? So it worked perfectly there. You're like, oh, that's a great trade there, right? So, well, what about right over here, right? When I came back on the backside test of this shooting star, right? Well, was the wick not big enough? Why did it blow through right there? How would I know other than getting a 50-50 shot at maybe it'll turn, maybe it won't turn, right? So we're already going with, okay, we have a concept and I can point to several places. Sometimes it doesn't get to the backside wick, like over here, where you go, oh, there's my location, right? I'm going to chase this and I'm going to get this trade over here for the short, right? But if you did, for example, the same exact concept um, over here, like if we move this same concept over here, like these would be things that always confuse me. Okay, is it, so if I look at the the backside test of the 50-60, right? So then I would have people explain to me that I was learning from or attempting to learn from. They're like, oh no, 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 it's got to look like it's got to look proper, right? Well then, is it is it this closed underneath and then the immediate backside test? And then how quickly do I cover it? And then is it this short here? And when do I know that it's not working? And there was always all these variations on answers. And that's what I sought to solve, right, with the algo. So now when we go and look, if we go by my algo, we took it in series. So the first question is if we took the algo in series in this area. So as you know, I declined to take this trade and regretted it later. You saw in the room when you were in there this morning. That trade set up perfectly. Oh, it was between 9:50 and 10 o'clock, and I usually get smoked in that time frame. So I just said, I'm not I said that's a perfect setup, and I'm not taking it, right? And sure enough, I lived to regret. Right? Is that's $200-300 a contract we left on the table, and you just kind of shrug your shoulders. You go, okay, that's fine. You know, as a decision I made, I got to live with it. But your question's very cogent about the volume. So now let's go look at this whole area over here. How would we work this out, and what would it look like, right? So we already know that we were underneath the line in the sand that I do in the room on this wave, right? But we were coming to the very bottom of the wave. And what I said in the room is normally when you get to the bottom of this wave, you can expect some kind of response. And that's exactly what we got in here. Was we got a response. As a matter of fact, if I recall correctly, I took this long and then I took a quick little stop in here, if I remember. And I really kind of lost the pace of the market. So, but let's say we were looking at that and going, well, what did that series look like and how did it make sense? So the first thing that we'll notice on the upside is that none of the bars on, let's spread that out, for the longs on the down rotation, from just the volume perspective, this wave did not qualify. The volume was not biggest on the end. I usually want at least 3 bars in a wave. So this bar, the first bar had all the volume, and the next two did not come close to qualifying, even though it worked to the upside, right? So now let's look at the short worked out. So here, where we got this is actually a high odds setup for us technically, right? So it's a red or pink, no demand, no supply, right? And then it got an engulfing bar. So normally, so remember this green area right here, this is initial balance. So normally the stop on that would look like this. It would be from here, 15,397, and then our stop would be 12 points behind, which I'm consistent with, right? So let's just call it 10 for the sake of conversation, right? It would be 97, and the stop would normally be right about here. Actually, that's way too big for this, for the way it's set up. It would be more like 97.04. The stop should have been like 07.50, right? And say, okay, that stopped. Now, the next thing we want to ask is, what does it look like when this setup works perfectly? So what happened here, number one, is we already came off of a 15, basically a 15,500, a 15,450 to 15,380, over a 50-point rotation down, right? So NQ typically has one of two rotations. A 30-point to 50-point rotation is a normal downside rotation. So the first thing I'm thinking in my head is, I don't want to short a 50-point rotation down. Why? It's not that sometimes it doesn't go down 100 points in a straight line, because sometimes it certainly does, right?
Right.
But if you took 100 occasions where it went down 50 points, the odds that without a bounce that it would immediately go down another 50 points is very unlikely, right? So,
Sure.
so I said in the room, there's no way I'm shorting this after that rotation. I think, I'm sure you heard it. We just weren't short here, right?
Yeah, yeah. No, I remember not specifically avoiding that for that reason.
Right. But if we had been, even if we had been short, let's say, okay, we're going to take that trade and we're just going to take it mechanically, and we had been short. What we got ended up here is, so we got the volume trade, but then immediately what happened? We get the no demand, no supply bar, plus the algo with the little green dot, and now we get the rotation back to the upside. So what you would have ended up doing is you would have ended up shorting 15,397.50, and then what you should have done is turned around and gone flat at 15,401. So you would have lost about 4 points on that trade, worst case scenario. And then if you were agile enough, or truly agile enough, you would have done exactly what I did, which was, we never shorted, but we did go long right at that 15,401, right?
Yeah, and we got the core off like 10 points higher, if I remember right.
Yeah, 100%. We got that. Uh, we got the 10-point. Actually, we had a 12-point scale for a 1-to-1 risk reward, right?
Yeah, that's.
And then I said, look, that's an initial over to the left. That's an initial push to the downside, but it was kind of sneaky. There was a couple characteristics that were missing. So we got this big push, but look how the downside rotation just really wasn't prominent in the cumulative wave. There just wasn't a lot of volume on the downside push. It's all right. It just didn't happen, right?
Even though there was such a liquidation, it wasn't on heavy volume.
It just wasn't on heavy volume. Sometimes you see like just this huge bars. It just wasn't there. It's all right. There's no rule that says it must have a big bar. Right. It just didn't in this case, and that's cool. Okay. So that's part of the challenge of the variance within the setups. Really throws people, right? And it really isn't that big a deal. What you're doing is going, get me location, get me area, and get everything to set up all at the same time, right? So if you'll recall, a couple of things were going on at this time frame. First of all, we knew we had Fed-a-Palooza coming up with 3 Fed speakers all at 11 a.m., which was at this time about 45 minutes away, right?
Right.
And so my thesis on that was, A, the bottom of the wave would hold, right? And that we should retrace up into Fed-a-Palooza, right? And then I also said, I was very clear, I didn't want to short going into the Fed, right? So why is that? Because the majority of the time, so yes, it went down today, but the majority of the time we had 3 prominent Fed speakers. And the majority of the time the market ends up getting goosed in that situation. And so I just said, look, I just don't want to short in this situation because I've had too much experience. So I stepped out of my trade plan, right? So what we're doing is we're going back and saying, well, what if we had traded it? What would it look like, right? So this trade, you would have hopefully either taken a small loss and flipped it for a profit, or you did what we did, which was we were looking for a long, and that didn't set up on volume. It just set up on a algo combo, right?
Right.
So next, when you look at this down wave, the volume didn't set up here. You can see there's just almost no volume there at all. You can just see it completely dried up right there at the bottom. And I just didn't get the algo combo. I was looking for a very specific combo. I didn't get it, so I did not get the long here, right? And as a matter of fact, within that process, I took a small stop right. How did I take this stop? Oh, right here, right? That was an on-process setup, and it just gave me a quick stop, and that's okay, right? No big deal. And I was trying to achieve this push back up going into Fed-a-Palooza. And I did say immediately when I took it, I was like, damn, that's past 10:25, and that 5 minutes is a really shaky place to take a trade. And sure enough, I got pushed back and got stopped on the trade, and then I didn't get set up to take the long again. And all of that's fine.
Yeah, this was into London close.
Right. So let me ask you, when I say all of that is fine, meaning I took the trade and I got stopped and then it set up, why do why do I say that that's fine that I took the stop?
because you took it on process. So if you do that over and over again, eventually it will pay you.
Right, and I'm looking at the trade in terms of blocks of 20, right?
Right.
20. I'm looking at 20 trades, and I'm looking at a period of 30 days, and
Yeah.
all I'm trying to do intraday is control my. I'm trying to get high odds location,
Yep.
right? Control the risk to the downside, and that connected so beautifully with what you and I talked about earlier today, right?
Yeah. Mm-hmm.
So many of us, you included, the focus is how do I avoid getting stopped, right? And it's a great question because if you don't have a fantastic, robust process, it's a really big concern. You can spend all day long getting stopped and blow up your account.
Yep.
And what we tend to do, right? There's this um, mentality. I taught myself originally. No one taught me how to trade, right? When I started trading, I read books and I lost money and made money based on what I was figuring out. There was no Twitter or internet or anything to figure out. Like there was no one you could call and go. Like I couldn't call Paul Tudor Jones and go, hey, not that I'm Paul Tudor Jones, but I couldn't call Paul and go, hey, Paul, can you see me for an hour after market and kind of fill me in on what I'm missing here? I had to figure it
Right.
all out on my own, right?
Yeah.
So it's a legitimate concern, right? You can't go, well, I'm scared of the stops, and it's an illegitimate concern. But here's the deal, right? Um, just like so a lot of us are just like dogs. Like I know you know you've seen a dog that's been beaten before, right? Like have you ever gotten a dog
Right.
from a shelter and it's not been taken care of and it's not been treated
Yep.
kindly, right?
Yep.
That dog, the first thing it does, because I've adopted dogs, right? What does it do? You get it home, it goes sits in the corner on the opposite side of the room from you, right? Don't want anything to do with you, right? Just doesn't
Yep.
trust humans in general. So why? Because that dog's been beaten. So like so many traders out there who've taken losses, that stop is their primary concern. Like they're like, and then we get into this kind of Dr. Jekyll, Mr. Hyde. I want to be in the trade if it's a winner, but I don't want to be in the trade if it's going to be a loser. And I really want to know which one it's going to be before I even click the button. And if there's any indication that it's going to lose money, I don't want to be in it at all, right? And which is so the way I overcame that problem from a personal standpoint is I said, I won't move stops. You see me do it in the room again and again, right? I'm going to take the stop on this. I don't like it. I feel like I'm going to get stopped. And where did I say that today? So let's back it up for a second, right?
Mm-hmm.
So when
That
I
was
took
the
this trade here today, what were the first
yeah.
in my stop? So I took the trade long here at 01, I believe, right? And my stop was, I think it was 90 or 89 or something like that. I think we're
Right.
89.50, right?
Yeah.
And I took the long, and then the first bar down I get is this speed bar down,
Oh yeah. I
right?
remember this. Yeah.
So
Yeah.
what did I say? What's the
You
first thing out
said,
of my mouth?
this is probably not going to work, but I'm not going to move my stop because I took it on process.
Right, like everything I wanted to do was just, and I was like, oh, if I kick it out right here, I can save myself 3 points of
Right.
pain, right? And
Right.
that
Right. Right.
that thought goes through all our minds, right? Like all
Oh
of
yeah.
us think, no, there's no one that sees the trade move against you as soon as you get it and you go, oh, this is fantastic, right? There's a few out there that go, I can add to the trade, but most people go, I'm screwed, right? So what would have happened to me here is if I did that is I would have never got my I would have never got my one-to-one risk reward, which came along because that looked pretty ugly right there, right?
Yep.
Okay. And if you'll remember earlier when I tried to take a trade earlier in the day, and it was based, you were asking earlier on the volume. It was actually this trade right here. It was actually not the highest odds trade, but I want to say I took this bar right here short. Looking at it now, I'm not sure why I did it. And then the very next bar was that speed bar up, right?
Oh, I remember this. Yeah. Yeah.
Yeah, and I said, oh, I really want to cover this and it's going to stop me. And sure enough, it did, like almost immediately, right? So if you look starting here, right, the important, I'm going to get to your question about the volume bar, right? So if I go in series on my trades here,
Mm-hmm.
so what didn't happen here? So the important part isn't if you lost money and you learned from it, it's all right. So What stands out to you here that was missing from this bar that I shorted right here?
Okay, so if you look down on the bottom, the volume was in the middle of that wave, not at the end. It's the number one thing, right?
Well, you didn't know that at the time because this is what you saw here. Let me tell you show you what the screen looked like, right? So that's an important part of the component. So if you
Yeah,
look, oh, and I see where I got a bit in here. Hold on a sec. I know where I took this.
was it? Yeah,
I really think
there we go. That might have been it.
I think I took it here, and I may have just straight up screwed up because that is not a high volume bar at all.
Mm-hmm,
And I think I took
mm-hmm.
this. I just think oh, you know what I did? I just took it blindly, and I took this right here, the engulfing bar with a diamond underneath it, the Algo
Yeah,
fired. I think I
yeah.
just took that, right? And then
It sounds like
the very next bar is
yeah,
a stop. So just to be fair to everyone who's watching it, right? Also in the morning, we nailed this short right here. We were short from 15,430, and I covered literally right here at
yep,
15,380. So in fairness, we took $1,000 contract trade right out of the gate this morning, right? And we nailed CL to the long side, right? So I don't want anyone watching this going, well, he just took a bunch of stops. But this time I did. But Ben's doing something very correct. He's going and looking at where, so for those of you who are watching this later, what Ben's doing right here is this obviously worked, right? It didn't take a lot of rocket science to figure out there's nothing to learn. The algo fired, we got the engulfing bar, then you got a triangle down, like it had everything you could possibly look for it except the volume bars, the only thing it was missing. But that's like a 9.5 out of 10 on out of 10 points. It may even be an 11, right? Took out the stop to the left. Everything looked perfect there, right? So when you compare that to over here, right? I don't have a no demand, no supply bar. I don't have a
right,
high volume bar at that point, right?
right,
All I have is instead of here having one, one, two components, I have over here is one single component, right? So that's mistake number one. And so instead of beating myself up over that, I want to go, okay, there's only one component on that. So then I want to go back and ask myself, well, or look at my notes, what was I thinking? And what I was thinking was, when you look over here,
you had location.
well, not only did I have location, we one tick the high and then gave this
Yeah,
engulfing bar. Okay, so that
that's right,
works pretty darn often. Not always, but
right.
pretty darn often. That setup works. Okay, so I'd say you have about a 60% win rate, but importantly, when that trade works, it can sweep from the top all the way to the low. You know, most traders are just looking for the one tick of the high is not an unusual trade to look for, right? Um,
Mhm.
so I could even improve that because we basically just took out the stop over here by a couple of ticks as well, right?
Yeah,
And then we get this
yeah,
giant sweep.
right.
So what you'll see there, what's the difference between the, look at those two and tell me what you see is the difference. Because they're very similar in terms of outward expression without the
Yeah,
algos. They both took out stops,
right.
right? So what do you see different between the bars on the left and the bar on the right there?
The pink no demand, no supply
Yeah. So you had,
is the main
instead of just one component, we had two components there.
two. Yeah.
Okay, so now you can start to train your brain. So here's what the flip side of that's going to happen. Sometimes you're going to get that component by itself, like you did over here. Well, this one had a
Right.
different component. This one had, when you look at it closely, had the highest
I
volume bar. So I'm pointing over here, but it's not quite true because in this case we had the highest volume bar right
okay.
here, and then we had the engulfing bar with the algo fire on it. See that?
Still a strong setup.
We had two components instead
You
of
had
just
two
one
components.
component,
Yes.
right?
Yes.
So so when you look over here, basically what it came down to is where I took the stop over here, I was trading it based on one component. Now,
Okay.
sometimes you'll get that one component and the trade will work, right? So now I have to go back to my trade plan and look. Do I only want to take trades that have two components to them? Or am I
Mhm,
still
right.
willing to take the bar that only has one component? And then you asked a great question to start off the whole series, which is how big a component is the volume bar at the end of the wave? coming into that thinking, right?
Right,
And
and how does that apply to like the different setups? Like, is it more important, for instance, for when you only have one component, or does it become less important when you have a second component?
exactly, because like when you look at the turn over here, look at the components that we got. We had no supply, no demand bar.
Yep.
The second to last bar had volume. And then you had
Mm-hmm.
a third component. So this is three components all mixed into one,
Okay.
right? Now, if you remember over here, so I'm going to show you how the rules-based process works, right? What was here? Why did it, even though I saw that and I said in the room, that's a perfect long setup, right?
Yeah.
Yet I didn't take it. What was my reason for not taking it?
What was our reasoning for not taking that?
Let me show you why here.
I don't remember. Was it a higher time frame issue?
Yeah,
Yeah, that's right.
we were sitting at the time. Oh, why is this on a 60-minute chart? That's horrible. Let's fix that.
Yeah, it's hard to read.
Okay. So now if we go back to this morning,
9 o'clock.
here we are. Okay. So here's where the perfect setup comes from, right?
Yeah.
Why am I not taking that setup?
Oh, is it point of control?
Yeah, we're at the prior day's point of control. So
Yep. Yep. Of
when
course.
you were in the room yesterday, right, you saw me trying to trade CL at the point of control, and what happened?
Yeah, we got ripped up.
Right. So they weren't big rips. What I did, I said, I'm at the
No,
point of control.
no, no.
I'm
They
going
were
to cut
paper cuts.
size, right?
They
They
were
were
paper
paper
cuts.
cuts, but I had to make a decision, right? And so even when I consider myself a good trader, right? And you have a rule. So I know when markets are mega strong that first test in that point of control, it makes a great magnet, but it's very hard to be consistent trading in that point. So what I said was, look, I broke the rule yesterday. I took two small losses. It didn't destroy my day, but it was really frustrating to take the losses. I'm better off just not making any trading decisions inside that point of control, right?
Yeah.
So now you could look at it today. So this is how traders get flip-flopped, right? So now if you looked at today, you'd go, well, you should take the trade at the prior day's point of control, right?
Yeah.
So you need enough samples more than one day to figure out, right? And if you look, okay, so if you look later in the day, right? So if you look at all those components later in the day, right? So if a trader took it here, they did okay. If a trader took it here, they did okay. If a trader took it here and they scalped out really quickly, they did okay. If the trader took it here, they got annihilated, right? The problem is this can get easily traded through, and you never know when this annihilation push will um, float through. And again, where do we cite the best areas for our trades is if we can completely stay out of value area, right?
Mhm.
If we can initiate out of value area, okay? And if you'll look, where'd all the best shorts come from? Above value area high. Where'd the best
Absolutely.
longs come from today? Above value area, below value area low, right? And then your odds increase as you push out and further down below value to find those trades. And so variance is a big issue because that will change. Like if we're in a down market, just taking the trade below value area low just sets you up. It's a quick scalp instead of a reversal back to the upside. Does that make sense?
It does.
Okay, so now that's why we didn't take the trade there. So now if we look and we're taking just follow me with this, right? So we know that we want two components in taking a trade, right? So
Yeah.
this didn't qualify for a short. It didn't have the two components that we were looking for, right?
Okay.
This
Right.
had the two components we're looking for, but it was in an area of the chart that we didn't want to trade on,
Okay.
right? So then when you come over here to the top of this, right? I took a short with one component and got stopped. So you might make a note going, I need to go look in other areas where there was only one component. Is this a 50-50 trade, a 60-40 trade, or 70 or an 80? And remember what we're doing. We don't want to capture every trade. We're trying to
Right.
throw out as much as we can that gives us low odds. So you'll see all over the internet. You don't have to have high odds to make money. You have to manage your money and let your runners win. But what people throw away in that process is the very simple question of, well, can you identify higher quality entries, right, that do have a higher win rate and get the risk to reward, right? It's not like I'm saying, as you've seen in the room many times, right? I'm not saying, hey, we have a 60 to 80% win rate, but our wins are 3 ticks, right? We're
Right.
always pushing for 10, 20, 30 points on NQ, right?
Yes.
we're,
Yep.
we're always pushing for that. So we're trying to take both sides of that formula and optimize, right? So now, as we follow the bouncing ball, that was a stop. And you saw I didn't move the stop, right? So on the
Right.
next trade, this isn't a setup for us, even though it had 3 components that we look for. So this is actually a valid setup at a high, but I haven't covered it, nor is it a documented entry. So let's forget about that for a moment, right?
Just ignore it. Okay.
Okay. So now we watch, we're coming down. Now, number one, you get the highest volume bar there, right? You get the highest volume bar plus
Yes.
a speed bar, right? Plus a triangle up. Okay, so the entry would have been here if you were going to look for the continuation, which I've said in the
Right.
room, this is my hardest trade, right? When you look on a trend day up,
Yes.
that bar reverses and goes. So
Right.
if you look at the highest volume bar, and then what happened next? Then you got triangle up, right?
Uh-huh.
No volume. It's actually a 2 bar combo reversal, but you get a no
Ah,
demand bar followed by an engulfing bar. What should, if you took this long right here,
you're you're
what,
you're you're getting out because it's a short setup.
right, but exactly how are you getting out, right? Because you got to remember you can't have an action. So you took the long here. So remember, so the two things you have to do to go side by side with all your trading is you have to remember that when you're looking at it right now at 8 in the evening, that
Mhm.
this is a static picture, right?
Right. Right.
So
Right.
we took that at 15,427. So in your mind, you have to be ready that, hey, if I get that set up and
Yeah.
I take that long and then I get a no demand and then I get that yellow dot underneath it,
Yep.
my stop is no longer 12 points back here, right? So the original stop, if I took that long, would be 27 and a quarter down
Yeah.
to 15, right?
12 points. Right.
Okay. So, but instead, what should you do? You take a double exit on that. You should be, so you end up with a 4 point stop
Uh-huh.
effectively, and you
Uh-huh.
immediately short. That's how you would have handled that area.
Right. You're basically reversing there
You are
because
reversing there.
you are reversing that. Right.
So
Okay.
so so now stop for a second and think about that, right? You just went through multiple steps, and what you got to go is with all your hopes and ambitions and thoughts that go into every trade. Like the first thing I think is when I get to that 1427, I'm usually already putting, like I'm going, okay, I'm looking 10 to 12 points up. So I'm already putting,
Same.
the first thing I've done is put in a limit order. I've told
Yeah.
my brain I expect it to go to 37 to get my scale, right?
Same. Yes. Right.
Okay. So now I've got to, so let's, this is important part of the understanding of how to trade. Stop and visualize that for a second and how fast all of that took place. You got the
Yeah.
signal to go long. You were trying for a continuation trade, obviously, because we're way up off the bottom there, right?
Yes.
And you've gotten a 30 point. So on a trend day up, if you'll go look at the chart, that 30-point rotation down, that initial long setup will pay you sometimes 50, 60, 100 points, right?
Absolutely.
And that
Absolutely.
certainly looked like a strong move to the upside there between 9 and 9:30. You were like, wow, that's a pretty impressive buy wave. There was no
Right.
reason not to think long. As a matter of fact, it would have been harder for me to think, oh, short, because I would have been looking at that going, there's no way we get underneath the bottom of the wave, right?
Yeah. Have risk reward. Right. Mm-hmm.
Right. But what did the process tell you? The process,
The
and that's
process.
where
Okay.
when I always cite Jim Simons, right? Don't outthink your own process,
Yeah.
right?
Yeah.
So in that case, so now you got to visualize I'm long. And now you got to write down what am I feeling? Well, I'm anticipating getting my 10 to 12 point scale to begin with, right?
Mm-hmm.
And then I'm looking for targets further up for the rest of my trade, right?
Yep.
Now I have to emotionally stop and go, oh, I've gotten new information, and I have to allow my brain. This is what a lot of people do wrong. You're emotionally committed to the trade, and your brain's going to reject all information that tells you you're not going to make money on that trade.
Yeah. Hmm.
Does that make sense?
Yeah, and it's so true.
Right. So you've got to sit down and write out that script. What's the script that's currently going through your head when you take that trade? And then you got to rewrite a new script that says, hey, this is a pattern that repeats. We've seen this several times, right? So if I get high volume, speed bar or high volume engulfing bar, whichever algo, and I take that long, and that's immediately met with a no demand, engulfing bar with an algo down, right?
Yeah.
I need to
Yeah.
flip. Or at the minimum, you close out for a 4 point loss instead of that's the only time it's okay to move the stop. It goes from a 12-point loss to a 4 point loss. So you cut 2/3 of your stop off, and you should flip that position completely opposite and go short to get paid.
Yes.
Okay.
Right.
So
Because in this situation, you're not moving a stop out of fear. You're moving your stop because you're not moving your stop. You are following the process.
I am following the processes 100%. Right now, you'll notice over the last 2 days when I've gotten good setups, right? You've seen now 2 days in a row because the PA. So remember, I excel personally when the PA is fast, brisk, and there's great rotations going up and down. Right? I seek out those markets. Right?
Right.
So you've seen 2 days in a row now where it's just been just a little bit slower, and I've had that don't follow the plan creep come into my brain. Oh, I'm not taking this because I start trying to read which one will work and which one won't
Yes.
work, right?
Okay.
And you can see how that little bit of creep, I'm a pretty disciplined trader, right?
Oh yeah. Oh yeah.
You can see how that little bit of creep of thinking, right? Instead of responding, it's just like any athlete in any sport, right?
Yeah. Yeah.
There's like we're ever watching a football game and the quarterback throws the ball and the receiver stopped running the route, so the ball just either gets intercepted or goes out,
Yeah.
falls for incomplete, right? And what do the announcers
Right.
say? Miscommunication there, right? Someone didn't
Yeah.
finish their job, right?
Right. Right.
Okay. So that quarterback, that quarterback can't go the quarterback, what he's doing is he's throwing that to that location blindly, assuming that his receiver will be there when the ball arrives, right?
Yes. Yes.
But sometimes that quarterback will also get to the line of scrimmage and he'll go, this is going to be a run. He'll see a different defense and he's going to call an audible based on what
Yeah.
he sees the defensive formation being. And we've all seen that too. So what we've done is we've said, hey, this is a long and we're going to push here. And then we go, oh, wait a minute. Defense is changing things up on us. We have to call an audible, cut our
Okay.
losses on this trade, even if we know that we're just going to have to hand it off for a small gain instead of throwing it downfield, right? Excuse the crummy sport analogy, but
No, no, you're right. That is exact. That's why they excel at that sport. Though, if you didn't have that plan going into it, no one's on the same page from get go, and everyone's wondering all along as the play continues, is he gonna throw to the same guy we talked about, or is this gonna turn into a run play all of a sudden? Everyone's got to be on the same page, right?
right. And the audible's never like when we were on playground football, right? The audible's never like, hey Ben, you just go out, just run downfield. I'm going to throw it to you. Like that's not the
Right,
audible, right?
right, right, right.
So the audible is always a pre-planned play, and everyone knows what it is, just like you said.
Yeah,
Okay,
good point.
that's how you treat that. Now, as you
Okay.
go through that process, we're going to go to your question. So remember here, I said, hey, we could have a potential reversal here. I remember very quickly we had that big volume bar. It didn't
Uh-huh.
materialize, so we don't respond to the big volume bar there. We go, it could set up. It just didn't, right?
Just didn't. Right,
So we
right.
keep coming down, right? So now we what do we have here? One component, right?
Yeah, yeah, just one component. Yeah, right.
So I learned my lesson over here, right?
Yeah,
Right? And what did I say over here? Remember in the
yeah. This
room?
was the one. Was this? Oh, let's see. This was 10 o'clock. So this is an hour later.
Yeah.
Uh, yeah, I don't remember what the.
I just said there's no combo there to take.
There's just nothing there. Yeah, there's
Yeah, I
nothing
just
there.
said we have one component, and I've already done the hey, let's play the one component game.
Yeah, yeah,
And
yeah.
so, you can keep trying to bang your head making something work, or you go, I clearly need at least today two components to make this trade work. There
Right,
are
right,
situations in fast markets So there is an asterisk to this. In fast markets and under the wave, which I'm not going to explain to everybody if someone's watching this later, but when you're underneath the wave to the high or above the wave to the low, and in a fast market, this
Yeah.
bar will usually pay you straight away. You
Okay.
don't need a second component in that, but you have to recognize that the speed is there and that the range
Yeah.
is there as well. Okay,
Which was not today.
right. So the easier thing to do, but in all cases, if you go, I'm not good at making that distinction. The easy thing
Mm,
to do is go, I always need two pieces of the component to take the trade, or I don't take the trade.
sure.
There's nothing wrong with that,
Sure.
right?
Sure.
So then we come through over here, and then what I said is, well, I'd love to see is this get broken over here and set up something right over here to the right, right? And then they
I
come
remember.
back, right? So that's where your short set up. And I said, so why aren't we shorting there?
So let's see, we've got two components. We've got maybe even three components with volume, but we don't have any way to, we don't, there's really no reason to think it's going to just extend far enough to get paid here, right?
Yeah, the big problem here is this wave was huge.
Yeah.
And so imagine for a second, see this setup, mentally move it over here where we got
Okay.
underneath the wave here.
Yeah. Right.
Okay.
I see it.
So now
Now it
replace
works.
these bars with these bars.
Okay.
Now that's a
Now
perfect
I like,
short. Why?
okay.
You'd have all the buyers trapped above you.
Yes.
Okay. So you got to remember, what are we doing? So think of it as if you were, so we're always putting outside pressure on our decision making that has nothing to do with the setup or what the market's offering itself, right?
Yeah.
So what a
Yeah.
bad trader will do there is he'll go, well, that should have been an algo. I'm taking it anyways. I don't care, right?
Mm-hmm.
What we're
Mm-hmm.
saying is, look, we know, like, I don't think there's been a day you've been in the room where we haven't had a chance for two or three solid, like, big rotation setups, right?
For sure.
And what we're doing is we're going, look, we know we get somewhere between 2 and 5 shots every day.
Yeah.
So we're going to wait till those 2 and 5 shots set up because A, we probably know we're like somewhere between 65 and 80% win ratio. And our R ratio is usually going to exceed 1.5, right? And that in many cases, we're going to get 2 and 3 to 1 RR on our trades. So in this case, the reason why we wouldn't take that is we already had a big extension down. We failed to
Yeah.
get below the wave to the high, and so we
Yep.
pause. Then we come over here, and I'm expecting to bounce from the bottom of that wave since that wave is so big. What happens
Right.
now? Even if you had shorted here, right? What would you do? You just like you had to train your brain over here to flip
Yep.
short. If you had
Yep.
shorted here, you had to train to go long. So we went long here, and this
Good.
is exactly where I said, then I get this bar and I go,
Yeah.
right now. That was a key moment in my day because had I taken that stop, right? So you got to
Yeah.
remember we're managing two things. We're managing capital, we're managing the process, but we're also trying to keep ourselves out of tilt, right?
Yeah.
So you
Yeah.
can only imagine that if I took the stop there and then I watch it go up the 15 points that it went up from my entry, not from that point, but from the entry,
Right.
I'd have
Right.
been fuming, right? Like you,
Oh, yeah.
and so what I'm seeking to do is instead of seeking to move my stops, like when I did my homework this evening, I said, I need more than one component unless I'm underneath the wave to the low and I have a clearly fast moving market. I need, or for another trader, I need two clear components to take the trade if I'm going to take the trade or I pass. Why? As you hear me say every morning in the market, we're not really trading the market. We're trading the setup, right?
Yeah.
So the
Yep.
setup has to show up to get paid. And you'll see so many people talk about when they're trading, well, I think the market's going to go higher, or we have a poor high, we'll go take out that high, or we have a poor low, we'll go take out that low, or there's this, that, or the other thing for a reason for it to make a move in one direction or the other. What's the message that I'm repeating in the room over and over again?
I've heard it plenty of times because I'm guilty of that pretty much daily until you remind me that all of that does not matter until we get a setup, and the setup will either show up or it won't.
Right. And when the setup shows up, we execute it properly and we know that we have the RR, right? And this is where you have to go through and write down. So C game, B game, A game, right?
Yeah. Yep.
When I was developing this process, one of the things I had such a hard time with was I would see this purple bar show up and I would go, I know the next bar is going to have a little green dot on it. Like over here, I play the
Yeah.
guessing game, right?
Yeah.
So because I'm such an aggressive trader, I would go, you know, oh, this bar is going to show up, and if I can just front run it, I can add another 12 points to my trade, right?
Yeah. Yeah. Yeah.
So if you look at that here, what would I do here? Oh, so remember this bar each of these bars, like after they form, they look so nice and clean, right? But during the day, they can range up and down quite a bit until that bar is formed, right? And it can really look like, if you look at this bar that closed at the absolute low, at one point, this bar looked like it was going to completely reverse and go higher, and it ended up closing and being a completely down bar, right?
Yeah. That's why
Same
I get the wick.
same thing here. You see the wick, it pushed all the way up. So what I'll do is I'll go and I'll say, ooh, that's a no demand bar. The next bar is going to have a little green dot on it, and I'm going to guess, right?
Totally guilty of that. I've absolutely done that.
And then so going through that process, I only had to take so many stops before I finally said, okay, well, this is stupid, right?
Right. This isn't working.
But here's the deal. You can go, this is bad. So what I learned from that experience and what I'm telling you and I'm telling anyone else I coach, right? I developed a habit of guessing when the algo would form, right? And I would get
Mm-hmm.
so anxious about the algo forming that I simply couldn't go and say, I'm going to wait for it to form because I thought I could kind of cheat a little bit and pick up a few extra points on the trade.
Yeah.
And what would I end up doing? So after a couple of stops, like let's say I guessed here, like I probably wouldn't have guessed here, but I probably would have guessed here. I probably would have guessed over here. And you're like, dude, I just took 3 10-point stops in a row. That's 30 points, $600 a contract,
Yeah.
right? And
Yeah.
I'm like, so that by the time I got over here, right? So the whole point of what you're doing while you're trading is keeping yourself mentally balanced and out of tilt, right?
Yes. Yep.
And I think when you're keeping yourself out of tilt, again, big fan of that book, The Mental Game of Trading by Jared Tendler. Lots of credit. When you're in that tilt, right? So what's the most likely thing to happen here? Well, they're not going to get me this time. I'm not going to guess. And then what happens? When it does form, one of two things is going to happen. I'm either going to be hesitant to take it because I'm going to be like, I don't want to force stop. That'll be 40 points. Put me freaking
Right.
down huge on the day, right?
Right.
Or I see this yellow bar and I go, oh my God, I finally, you're so mad because you took everything off process,
Yep.
right? You
Yep.
finally take it on process, right? And then you go, oh my gosh, it's going to stop me. I can't take another 10-point trade,
I'm
another
out.
10-point stop. I'm
Yeah.
out. And then you
Yeah.
see it go right here. And then what are you going to do at that point? You're
You're
berserk at that point, right?
absolutely. Yeah. You're gonna shut down the broker. That's what you're gonna do.
It, it,
That's the right thing. Right.
exactly. So the whole point of having the process and staying consistent as you can, and again, it is not a question of perfection. It is a question of moving towards trying to be perfect. Okay, so you're
Mm-hmm.
not going to be perfect, but every day you're going to try to improve your execution towards perfection. And there'll be some days where you get it all 100% right, and there'll be some days where you get it all goofy footed and screw up every trade. So
Yeah.
that's where your max daily stop loss comes in, as you've heard me discuss in the room,
Yep.
your max hourly stop loss, and the max number of stops in a row you can take in an hour. All of that is designed to keep you out of tilt so you don't blow up.
Yep.
Make sense?
Absolutely.
So going to your
100%.
question, right? If we stayed with the process, right? So here's what's interesting. Right here, right? We then get a no demand. We get the second to last bar has the volume on it. This is actually no, that's right.
It's right there. Yeah.
If you throw the first bar, second to last bar has the volume on it.
Okay.
No demand, engulfing bar. Okay, so now remember here,
Not below the wave though.
you're not below the wave, but you are into, I believe that's a 382
Uh,
retrace.
at least
Oh, it's a 50 retrace. I take it back.
looked
Okay.
like to me too. Okay. Great.
So if I take this here, right? So if you remember earlier in the day, there was a 50-60 retrace in CL, and I was talking about this. How do you manage this component in here in this
Yeah.
50-60 area? So this is the flip side. So we've already cheated. We've looked. We already know that it works, right?
Right.
So if you look, we get we get the volume component. We have three components: volume component, no demand, engulfing
Yes.
bar. That's a good trade, right? So let's all, and we're at the 50-60. It doesn't quite hit the 50, but close enough for hand grenades, right?
So that's basically like replacing the under the wave to the high. It might not be quite as powerful, but it gives us some more evidence that this is like a reliable spot.
Right. So basically, my stop here is going to be 17, right?
Okay.
That's my stop. So what's the first thing I'm going to do when I take this bar and I see this? So
Right.
I keep repeating that because I want you to practice that sick feeling of having the trade go up against you immediately, right? Because this is the hardest part of any process is having that trade go against you, right?
Yeah, my brain says you entered too early.
Right.
You should have waited.
Okay. So what's the first thing we're shooting for here, right? So we risk 12 points. We have a win rate that's over 60%, right? So you don't have to have a one-to-one risk reward. So at this point, you've shorted 05, 0475, and you've got 90. You have 15 points. So there's two things to keep in mind. A, this represents $300 a contract, right? That's a good trade by itself. You don't have to figure anything else out in there. That's a good win for most people,
Right.
right?
Right.
And if you look over here, as you push through here, we're going to go a little bit over an hour, Ben, but not much. Okay.
Oh, you're good. I appreciate it.
So then when we come over here, we only have one component of the two or three components that we're looking for, right? We don't have volume, right? All we have is so no trade, right?
No trade. No trade. Agreed.
So here we only have one component, no trade, right?
No
So
short thing.
so there's only one or two possibilities here. You took your short, you covered the whole thing, you covered whatever your strategy is for covering and taking your trailers. You either closed the whole thing out, you covered half, you covered three quarters, or some variation thereof. Whatever your strategy is that you've put together as a trader, right?
Right. And you're not moving stops to break even. I know this is not what we're talking about today, but that's not part of your plan, right?
It is not unless I get a 30 or 40 point extension and I decide I'm going to push it at that point and I've gotten my first two scales. And then I give myself the option of doing it. But usually what happens is we get another algo set up and I'll already know it shouldn't surpass this algo setup and I need to stop out anyways if it does that.
So, I like that actually.
Okay. So we'll cover that. If you'll write that down, we'll cover that in detail in our next coaching session.
Got it.
Okay, so now we look and we see this triangle up with this no demand bar. So immediately we should go, hey, that's the beginning of an opportunity, right? So we're not guessing. So we look and we go, okay, triangle up's not there, but we still have the no demand bar, two no demand bars in a row, right?
Okay. They might get trapped. We should be prepared.
Right. So didn't set up there, right?
Nope.
Now we have the volume component right there, biggest volume bar.
Okay.
So now you should have in your mind what do we want to happen? So we can either look for a yellow bar next.
Yep, speed bar, yeah.
Or a bar with a yellow diamond underneath, right?
Really big engulfing, right? Yeah. Okay.
So we got the speed bar, but we didn't get the diamond. But that still qualifies. Volume, that's two components.
That's okay. So we got two components there, volume and speed bar, right?
Right. Now we can go back for a second on this, right? You can push that trade higher and demand that little that little yellow diamond be underneath and just say, I'm not going to take this. But I can tell you that's floats between 60 and 70% win rate just with those two components there.
Just right there. Okay.
Yeah. So if you continue to look, and that's the one that paid really big and into the Fed. And so then you look right over here. So remember, this is another example. You see how many times it sets up.
Right.
Right. I would have covered my entire short right here on this bar. Why? I got the volume component.
Yeah.
And I got the blue speed bar. I might have even gone long. Right.
Right. Because the location is pretty good too.
Right. So now we're at the bottom of that wave. It's gone through a drawn out consolidation there. And we've been going up for 3 days in a row. Why wouldn't you think you're going up? So remember, that's what we're thinking still is bullish. But if you went long here, so first of all, two things. When you saw, you've already seen enough. If you get this speed bar followed by a no demand, no supply bar, right? you've already got to be on edge as soon as you see that bar. And you got to be ready to come out of that trade. So you're going to train your bar. You're going to train yourself like this. You should look at it
Yeah.
long. I've got to be ready to come out. I don't get out there, but I've got to be
Right.
ready to come out of that bar because that's telling me something's up. That's unusual. It usually
Hmm.
doesn't form. When it looks right, it usually looks closer to something like this, right? It usually,
Yeah, I see what you're saying. Yeah, this looks more like the top. I mean, not top, but like more like the this is like the other side of the trade. This is the end of the wave usually, right? The rotation. I mean, the end of the rotation, not the beginning.
exactly. And today
Okay.
was, I'm going to give you, today was a bit of a freaky day. Like the way the whole thing was running, it was just a,
It was
whenever you had
super
those
weird.
Fed things coming up, it always puts the market kind of in a weird mood. And then we had Tesla after the market, and we had
Uh-huh.
Beige Book. Like everything was getting delayed. Like when you think of an institutional trader, right? So we're
Yeah.
trading, depending on who you are in the room, you're trading anything from 5 micros to 50 contracts. But that's pretty
Right.
small fish, right?
Oh
Like
yeah.
in the bigger picture, we're like, even if you're trading 50 contracts a turn, you're a small French fry in this
Yeah.
world.
No
Like
doubt.
the
Yeah.
Paul Tudor Jones of this world are trading 10 to 20,000 contracts per pop, right? And they're
Right.
just throwing them out there, and they're so while 50 contracts may sound a lot to most retail traders, it's not a lot in the institutional world.
Yeah.
Okay,
Yeah.
so when you see that, you have to be on guard, and then you have to be ready to go. Okay, at least I've come out of my long. And again, you'll see how many times that reverses. You'll see when we get that reversal signal, how many times that signal actually gives these beautiful extensions,
Yeah.
beautiful extensions to the downside. And again, you'll see, yes, we got the algo bar, right?
Uh-huh.
You got enough to get your one-to-one risk reward off, but then what did you
Right.
get right here? Triangle up,
Uh-huh.
engulfing bar with the yellow diamond. That's a
Reverse out.
continuation trade right there, right?
Yes.
To the
Yes.
downside. So even if you covered everything because you got spooked here, you should enter
Right.
everything right. All the momentum's flipped there again. That's during a Fed speaker and New York lunch, and that sucks. That took place that time of day because I got none of that. But that's prime
Yeah.
time setup. This is long
Uh,
right here. This is back to the anomaly, right? So you have to make that. This. Oh wait, is that no? That's way past the anomaly. This is underneath. Value area low is right here. That's actually right long. This is value area low from the prior day,
Yeah,
right?
so we're beyond the value area of the previous day. So, like we talked about earlier, yeah,
Totally
like
willing
when,
to take that. This is
yeah,
a great setup. I'm totally willing to take that long, all day long,
yeah,
and you'll see that it gave
yeah,
you really a beautiful pop to the upside. It was 19 to 80. That's 50, 60 points. I wasn't here to
yeah,
take it.
yeah,
I
yeah.
wish I
And
had
I
been
was
here.
thinking there wasn't enough. I didn't take it, and my reasoning was I've got the algo bar, I've got the purple no supply, no demand, but all the volume is in the middle of the wave, and so I didn't take it.
You're over
But
focusing on the volume.
exactly. And that's where that question came up. Is then I saw it play out, and I'm like, hold on a second, maybe I'm giving the volume setup way too much like primacy, where it's actually just another component, just like anything else.
And that's totally normal. Like when I figure out a new pattern or I add a pattern
Yeah,
to my trading mix,
yeah,
what I will tend to do is overweight that
yeah.
single component. And
Okay,
it usually takes me a day or two to come back and go, okay, let's get it right. So the way I solve that for myself is that unless the volume's at the very end, the volume doesn't matter to me. I don't care where it comes in.
okay, I like that. I mean, I don't know if a lot of people know this, but like, I work a regular job, and so I'm only able to trade two regular trading hour sessions a week. So a lot of times, we might talk about these things on a Wednesday, and I don't actually get to apply them until a Tuesday. So it's, it might, I seem like I'm a slow learner. That is part of it, as I actually do not get a whole lot of practice with this, but
You don't
that's,
seem like a slow learner, but one thing you should be doing is if you wake up just a wee bit early, and I know you're in Vegas, so a wee bit early is a wee bit early. So like what time do you go to work in the morning generally?
my first client shows up at 8:15, but I can push it a little
Right, but that's 10:15 my time, right?
bit. Exactly.
Okay, so when you look at that, right? So that means you're getting up at, well, if most people, you get up probably 2 hours before you have to be at work, right? Hour and a half, 2 hours,
Exactly.
right?
Yep.
So so I want to show you something that's important. Yes, NQ and ES are hard to trade in that first 30 minutes, right? Which is right when you're waking up. And even if you got up half an hour early, why would you want to trade that first 30 minutes, right?
That's what I've always thought myself. Yes.
But this is really important. You do have another market you can look at,
Hmm.
and it's CL, right? So
Okay.
CL opens
Ah.
up at 8 o'clock. It's much more institutionally driven.
Ah.
And as I covered this morning, right? So we got long. If I can
Yeah.
move this chart, I may
This
not.
was a beautiful trade, by the way. I mean, like I said, I have not traded CL, but I watched you guys do this, and I thought this morning I need to brush up on this and start to at least check this market out a little more closely because this was just, I mean, it was technically just magnificent
Well,
and
this was
textbook.
everything that you look for textbook. It's in trend down. It's trend down overnight, right? You can see that. So all the overnight shorts, if you go back and look in this, so see once we got underneath the wave here, see how
Yeah,
almost every speed bar, every bar that even if it doesn't have. So this is a great follow up to what we were talking about earlier. See how once
okay,
this is the wave to the high here. So
yep.
once we got underneath that wave to the high, so let's say
Mhm.
you need either the volume setup, so you can see here, you can throw out the first volume bar, throw out the first volume bar in the wave, and you'll see that if you throw out that odd bar right there, so that was the
Yes,
close, right? So you gotta remember this is early Asia, and I don't trade it, but
got
you'll
it.
see that was the biggest volume bar. So you had
Yep.
two components, biggest volume followed by speed bar. You didn't have the little diamond underneath, right?
No,
And
right.
and if you look again, I don't trade early Asia. I don't trade Asia at all on this, so this was kind of funky. But this gets you over here. But what the one component it had was you got underneath the wave to the high. And remember again, our guy who's the $1 million trader who only trades one contract, right? He's
Huh?
short. Actually, this bar right here is the bar he's
Mm,
short, and his
okay.
stop is all the way on top of that wave. And he obviously, our
Did
imaginary
fine.
friend, killed it, right?
Yeah,
but
yeah,
it gives us a basis to think about structure, right? So if you look once we pushed into London, right, what are the components we're looking for? We're underneath the wave. We haven't gotten above a wave to the low all the way down. So what are the components we're looking at? So now if you look, like here, see how once you're underneath the wave, you don't have the volume component. You only have one component. But because
yeah,
broken, this is where you can get more aggressive on that wave. Or what you can do is you can use the triangle down as the second component. But here you get no demand, speed
okay.
bar. Beautiful to the
Yes.
downside, right? Here you get no demand, uh, orthodox bar with a diamond underneath. Down it goes, right? And
Yeah,
so you can see
yeah,
overnight it was pushing. So the first thing you see is you get this. Look how extended that move was. So look how extended the move was to the downside. So the first thing I would point out is look at the wave. The volume
mhm,
was actually smaller on the bigger extension than
mm,
the volume on the smaller extension prior. So what this was, so what that tells you is that on the open, market makers stepped away from the bid as opposed to people hitting the bid with volume. Does that make sense?
yeah,
So remember, there's
yeah,
two ways a price can go down or up. People can simply pull their offers or their bids, right?
right.
And therefore, there's not as much volume to be hit. So therefore, it takes less
Yes,
volume to sweep, right?
yep,
So you can have a buyer's strike. So what I would say
mm,
is instead of a seller's stepping in here, that you
yeah.
had a absence of buyers instead.
Absence of not more aggressive sellers. Okay,
Yes. Okay. So next, when it pushed in, so this is the important part where you have to put in multiple components at one time.
yeah,
So this is the daily chart on CL, and we have two components. So the first thing that we highlighted on CL this morning, which I haven't changed these charts, right, is I said that 8110 before market, that was going to be a key area. If we could get underneath 8110, we had to look for the swing. And because of the way the structure of the profile chart, first thing, what
yeah.
did I say? We could sweep the entire range. That had the
You
potential,
literally
actually.
said that exact thing 15 minutes before it happened. I mean, it was, yeah, it was wizardry. It was awesome.
And when you look at that, that actually ended up being worth $3,000 a contract if you held
Yeah,
overnight. Like it just never came back. And again, so that's a personal thing with me. I'm not going to hold into numbers. That's all there is
right.
to it. It was still worth a lot of money to me. I think the best I pulled out is $600 or $700 a contract. But
the algo fired, and it set up beautifully, and it was
Right,
right in the right spot. You couldn't have built a better trade
right. And
than the
so,
algo.
and if you look at it in addition to the line in the, where our swing indicators are, in
Right.
addition, from the profile chart, you had an anomaly sitting
Mm,
right here at eight. So,
yeah.
so the
Yeah.
swing getting underneath 8109, and then we pushed into this 8108 to 8097 area. I was like, wow, that's perfect. And what
Right.
do I always say in the market likes to trade anomaly to anomaly, and the first target is back into the prior day's point of control, which again you can see, look how hard the trading was inside of there to nail any kind of significant move, right? And then of
Yeah.
course,
Imagine trying to enter there. That's pretty tough.
yeah, and then of course you can see that whole pop just came off the number, right?
Right.
So so now when you go back and look, so now we have multiple components. We have high time frame components adding to this trade. And
Yeah.
the first thing I said in the room is like, no, look, guys, normally I wait the first half hour, but that is
Yeah.
picture perfect right there. So if you look, I said, so it was a reverse pattern that we don't normally get. So I would have preferred for everything to be absolutely perfect. We didn't have the volume component, right? We did
Yeah.
not have
Right.
the volume component. Um, and what I would have preferred is this bar to be one bar down. But what we did have is, so to end the debate with who's the ex-cop guy that you talked to on Twitter? What's his name?
Yes, Ed was asking
Ed.
about.
Ed is asking.
Yeah.
Yes,
That
Ed.
looks a whole lot like my algo. He said.
Yeah, it's not your algo, but it is exactly what you think it is. It's the point of control of that bar. It's the volume point of control of that bar. And I'm more than happy to talk to Ed anytime. Sounds like a great guy. I don't
He
answer
is.
publicly questions about the algo, but I will answer that one. It's simply the point of control. There's no voodoo or magic to it. That's
Okay.
all there is to it. And
Cool.
it's an important part of my thinking process. And it's an
Yeah.
important part of the algo process along with Delta, right? So what I said here was, wow, this didn't set up perfectly, but it has everything. So our two components came from something else, right? We were below the 8109 and we were
Yeah.
into the anomaly. And I was like, this thing's in bull market city and we have numbers come out. Like, how are they going to tank this thing, right?
Right. Yeah. Big picture. You just know that eventually they're going to buy it.
Right. So then they came down right here, and I said, oh, wow, they pushed. So what that yellow bar tells me is that someone pushed very, very hard to the downside. And I said, if they get above this guy. So what I did was I took a long at 97 cents. So I'm long right here. And so the natural thing to criticize is to be like, well, wait a minute, Simon, you were off base. It just took, like, this happened so fast, and it took
Oh
me a
yeah.
split second to calculate everything. That was like, so I'm looking
It's
at,
the open.
yeah, it's pretty much the open. I'm like, wait a minute, we just went into the 8103, 8109. We went into the anomaly. We, someone shoved really hard right at the low. We got this, like, and basically what I said is this is kind of a reverse pattern. Instead of getting the yellow bar to the left or the purple bar to the left. We got the engulfing bar. Someone pushed down really hard and they got completely stopped. And I just said in the room, get long. It was pretty much
And
what I
you're like,
said. I
I'm
was,
taking it. Yeah. You said I'm taking it. Check this. We just talked about this, you guys. Look at this.
yeah, and I just said, take it. I was like, just like
Yeah.
grab it. And I marketed it in, and 8097 was my fill. And so I put, I think, a 25-cent stop. You had to get a stop down here, right, to make
Underneath
sure
it.
you
Right.
survived.
Right.
So I
Sure.
said, my first target's 25 cents. I got the
Yeah.
25 cents. I got my one-to-one risk reward. So that's a great example of where the components came from higher time frames. And you got to remember, so when you're looking at this in these 5-minute bars, this is like looking at someone's hand, right? We can see the
Yeah.
whole picture. It's real nice. You can see that the hammer there. And so everyone asks me all the time, Ben, like, well, why not just use the 5-minute chart? Like it clearly works, right? Well, what's the one
Mhm.
thing that we're trying to do that other people have a very difficult time doing? What's the key
Trying.
component to all of this?
We're waiting for it to for a process to actually set up and give us a trigger
Right, but why do we want such a pinpoint process? What's the advantage?
so that we can be consistent.
And leveraged.
And well, of course, and be able to take it with leverage, yes, and know exactly what we're risking and not risk, a huge amount of our account because it's so leveraged.
Right. So if I look at the same bar at 805,
Right.
right, and I see that it's hammered up, right? So the first time I'm going to look on this and go, oh, it's long. Like at the
Yeah.
earliest, it's this, which would put my long at 81.20. So if 81.20, instead of having a 25-cent stop, I now have a 40-cent stop, right? If I wanted to
Right.
wait to get above that bar and backside test it, right? So the whole bar is valid. Now I'm 81.43 to 81.80. Now I'm going to risk, right? $630 a contract, and I have no idea that this is coming. Right now, in
Right.
retrospect,
No.
right, I can just go if I want to be one of the YouTube jerks or one of the guys on Twitter, go, oh,
Right.
look at the hammer bar, and it's so
Yeah.
obvious once we get above this hammer bar that it's going higher, but the true
Right.
stop's down there. So if you're a small trader means you have less than $10 million, in my opinion, right? If you're a small trader and you're trying to trade leverage and grow your account, how are you going to use an $800 stop on a 5-minute bar and not be mega anxious? And how are you going to figure that? And then the next thing you're going to want to do is this. You're going to go, oh, well, that's too big a stop, right? So what are we going
Right.
to
Go
do?
through it.
Now we're going to do this. Now we're going to do a 50-60 retrace. Now we're going to do a really big 50-60 retrace, right? And it comes back into the 50, but what's the stop on the 50? It's still all the way down here. Like
Right.
there's no way you're going to do more than either you're going to do micros or you're going to do, you're going to throw one contract at it maybe, right?
I mean, at this point, you'd have to like swing shares or something.
Yeah. And so now we're looking at the thumbnail of the hand, right? That's what this is. We're looking very, very pinpoint action. We're going, oh, wow, look, the key there is the 3 points of control right there. Like when I saw that, I was like, it is gone. And the only reason I'm at
So
97 cents instead of right here is I just couldn't get the mouse over to the dome in time.
yeah,
Technically, the entry should have been 95 cents. 2 cents of
you
slippage. That's all right.
you weren't the only one looking at it. Let's put it that way.
Yeah, no, everyone saw it. And that's the whole key to it, right? The whole key is I haven't, when everyone says, hey, I have found something that no one else has discovered about the market, well, then that's stupid. You know why? Because unless you're a billionaire, how the hell are you going to
Right.
get anyone else to move the position after you're in?
Good call.
Right? What you want to know is where is everyone turning on it, right? And then here's the other problem. As the room's been going since 2013. If you just use location, so again, I could just come up with this map, right? And in the morning, I can say, hey guys, if it gets to 8109, get long. Well, what's the problem with that? Well, I can tell you what the problem is. That if you took it at 8109, right, it looks genius now.
Right.
What stop did you use? And how many retail traders do you know that use a 30-cent stop on CL? Like
Not on futures. You shouldn't
very,
be.
very
You really
few.
shouldn't be. Yeah, you really shouldn't be.
And let me tell you, were you going to stop out once you got behind the anomaly? Because let me tell you, when you look at this over here to the left, right? And so let's say we didn't know what all these algos meant and we didn't have all
Yeah.
this, right? All you're seeing is this right here, and you didn't have the rest of the information. So
You just see a cascade lower,
right,
basically.
that's what you see right there. How many
Yeah.
people are just going to go, hey, I'm going to step in? And how many people step in on a process like that and are
Mm-hmm.
successful, right? So few.
Right. Not
So
consistent.
so the whole key to that is, okay, I've got one component. I'm not sold yet, right? I haven't done anything yet.
Right.
But now I go, oh wow, someone pressed really hard. That bar tells me someone pressed really hard. Boom, I know we got to go, right?
Yeah. Yeah.
And more importantly, I'm willing to donate the 20 cents or 25 cents that'll cost me to take the trade there. Totally willing to, and I said that. I am totally
Mm-hmm.
willing to lose money. And that should be the question you're asking is, what are you willing, forget what money are you willing to make, right? This
Yeah.
trade took care of
Yeah.
itself, right? We didn't have to do anything on it, really. It just kind of took off, right? The only reason I
Right.
closed it is that it was going into
Mm-hmm.
the number, right?
Yeah.
So we
Yeah.
we didn't have to think, what do we have to say? How much money am I willing to pay for that piece of information, right? And that
Yeah.
should be the question. And Paul Tudor Jones says that. think about how you lose money and what you're willing to lose money for. How are you willing to do that? Most people are constantly walking this tightrope of, I hope I don't lose, I hope I make money, but the first instance that I might lose, I'm going to take my stop. And the first instance that it might come back on me, I'm going to get out of that as well, right? And
Mm-hmm.
there's no deeper thought process to what's going on. And what this algo's done for all of us, myself, you, everyone in the room, everyone who has that software on their desktop, is it's giving you a way to decipher the noise into actionable, profitable P&L, right? And now what you're finding in your journey, right, is you're finding that your thinking is screwing with your trading. And,
Exactly.
and the secret to that is it always will,
Okay.
right? The thing is
Okay.
to understand what you're going to think when you take the trade and have defenses in place, right? So that's why when people
Right.
go, "Oh, I trade without fear." Okay, well, if I wanted to bullshit you, I was trading that this morning with fear, right? I boldly proclaimed in the room, "Get long," right? You can't be any
Right.
more bolder than that, right? I said, "That's it," and I said,
Yeah.
"I'm willing to lose my money here," right?
Right. Right.
But I wasn't. It wasn't that I wasn't scared. Would have I been disappointed if I got stopped? Hell yeah, I'd have been disappointed. But that's
Yeah.
what you're looking for right there. I had all the components. It doesn't get prettier than that. That's it, right?
If you're not going to take this, why are you trading anything else? Because that's actually what we're looking for. That's why we're here, right?
100% agree with you. So I think we should wrap up. I want you to
Okay.
continue to send me your questions and we'll address them. I think we addressed the volume, the primary volume
We did.
question that we started with.
Absolutely. I feel a lot more comfortable about that. And yeah, I see how it's fitting in to the whole strategy.
Right. And it takes a while, right? It's just like any sporting event where you have the playbook, right? Or anything you've done professionally, right? So we used a great analogy earlier, right? When you're learning, and there's always going to be the question of, well, how do I know? So even though I see Simon making money, how do I know that I'm going to make money with it, right? There's always that tiny rub in between there, and especially when you
Mm-hmm.
get started, because there's going to be missteps and misfires when you start off.
Right.
You're going to misexecute.
Yep.
Old patterns and old habits will interfere with your ability to take new patterns. Your brain,
Yep.
the market may be too fast or too slow for you in certain instances, right?
Right.
You're having to dig through a lot of stuff. And so, like we said earlier, the volume, you're putting too much emphasis on it. Only worry about the volume if it comes at the end of the wave, and then forget about it the rest of the time,
Okay.
right? If you're at the point of control, don't trade there, right?
Right.
Sometimes it works, sometimes it doesn't. You want where it works the majority of the time, right? That's
Yeah.
what you are looking for as a trader, right? And then stop worrying about what the market, now I'm telling everybody, stop worrying whether
Right.
the market's going to go up or down.
Yeah.
Look at location and then know, hey, if this is a prime location, I've identified this as a potential swing. If I get all the stars to line up, I need to remember this is a potential swing and to push my trailers out of this area. And then
Okay.
what you'll find is the money should start to stack up for you over time.
All right.
And then we'll start to discuss how to leverage up on these trades. Once you get, the first key is going to be to get to see on your end, to see the winning trades start to stack up. Once we have the winning,
Right. Get consistent with it. Execute like consistently.
right. Once we have that, then we can go to the next component, which is how do we increase size over time or even
Okay.
intraday to capture more trading profit. And then the other thing I'll tell you again, you don't have to trade all day, even if you only have
Right.
2 days a week.
Right.
And that CL open, usually we have a trade set up almost every day between 8 and 8:30. Not every day, and if it doesn't set up, you just don't do anything. But that's 6 to
Okay.
6:30 your time. You should at
Yeah.
least be taking a peekaboo.
I was going to say I'm willing to get up a little bit earlier, get to bed a little bit earlier. Really is what it is, and have an opportunity to trade a better market. I mean, because the only other option is to stay up real late through some of London, and I feel like that's more detrimental to my health because then you get into a position, and if it's really nice, you know you're sacrificing your next day. I mean, I love trading London when I don't have to wake up in the morning, but if I got to be up and performing in the morning, it's better to get the sleep in first, get up well rested if you're prepared to trade find something like this where I can get into something and have a reliable trade setup potentially set up. You
And
know?
then you got to remember the goal. The goal isn't to get rich next week or next trading day, right? The goal is to build
Right.
your trading account.
Yeah.
And if you'll focus on process, will
Yeah.
increase trade size over time, right? So I think $300 a day is $75,000 a year. I'm not sure I'm correct on that, right? And while we're not trading to a number, that's a number
Yeah.
that's achievable, right?
Yeah.
And so you got to
And
remember,
that's life changing. I mean, that's a big deal, 300 bucks, especially if we're talking one or two trades a day that work out, 300 bucks a day, that's life changing money.
right? And you got to remember that's going to include, that's where you want it to average out, including stops. And here's the deal: so there's going to be some days like
Right.
today where you could have taken that trade, left your stop in place, taken the
Yeah.
scale, the risk off, and walked away. And I'm going to tell you, you're going to get, if you'll do that, you're going to get 2 or 3 runners every month where you're going to be like, wow, I took out 50 or 60 or 100 or 200 ticks out of that trade, and I just can't believe it, and that's fantastic. So that's
Right.
my
Right.
that's my two
Especially when
cents.
they set up like this, where you have multiple time frames all working together. You waited for the right execution with the algo, and you don't think, you just act when you see it. We had a plan. We just waited for it to happen.
Yeah, I agree 100%. So look, I always enjoy talking to you, Ben. I love the energy you bring to the room, by the way. So I thank you for that, and your willingness to help others. It's obviously you're well known for it on Twitter, and Twitterville, and then the various rooms you're in. But and Ben's a great follow. Ben, what's your Twitter handle, by the way?
It's at Red Ben Trader.
At Red Ben Trader, and I'll throw that in on the description of the video. But Ben's a fantastic source of knowledge and information about the market. And Ben's also a great example. When Ben and I started speaking, and Ben, I hope you don't mind me diverging a little bit. Ben knows
Go ahead.
Ben knows a boatload about the market. He knows a boatload about volume profile, right? But I said to Ben, I said, Ben, you're great encyclopedia of information. The problem is you haven't taken that information and boiled it down to a formula that lets you pull money out consistently. You know a lot, right? But you don't know anything micro. You're not you're more like the health teacher, and the health teacher in high school knows all about the human body, right? But that health
Yeah.
teacher, if you have a cardiovascular problem, cannot do heart surgery, right?
No.
So I want
Right.
to take you from the guy who knows a bunch about the market, really smart, bright guy, and I want to make you the cardiovascular surgeon. This is what I need. This is what I'm looking for. This is how I pull out money, and I want to convert that from a I want to convert that from a guy with general knowledge to a guy who uses a scalpel and pulls money out on a regular basis. And I know you're totally capable of doing it. And I know that because you see other people in the room. It's not just me. There's other people in the room executing those exact same trades.
Right. Who started where I did? I mean, a lot of the guys and ladies in the room, have been around for a bit, and they you can see their progression over time. They're maybe now they were where I am now, just maybe a couple months ago, and some of them are already, you just see what they're saying. They're catching on to it, and they're making it work already. It's exciting.
I agree 100%. Look, it's late on my end, and I am going to try to get up
Yes.
early and trade. So you have a great night, and I will see
All right.
you.
See you in the
If you
morning.
have any questions in the morning when you're trading early, you can just ping me. I'm around. I'll be up and
Cool.
working at that point. So, anyways, I'll talk to you later, my friend.
Okay. Thank you so much. See you,
You bet.
Simon.
See you. Bye, Ben. Thank you. Is doing pretty damn good.